Since focused fund run a concentrated portfolio, how do you ensure that portfolio concentration does not translate into unintended sector or factor risk? How do you decide position sizing and conviction levels?
So one of the ways, obviously, we are trying to reduce style risk or factor risk is by having a blend portfolio. And the other way, what we do, and is also an outcome of the intention to have a blend strategy, is also that we try to avoid taking disproportionate sectoral risk. So if you look at the sectoral allocation, it's not that we take, I mean, leaving aside one or two sectors, we try to avoid taking huge sectoral risk. Obviously, because it's a concentrated portfolio, stock specific risks will be higher. We can't avoid that. That's the nature of the product. But we avoid taking any significant style risk and we avoid taking any significant sectoral risk. That is how we try to reduce the uh, risk in the portfolio. On your second question on the conviction, so basically, if you look at the portfolio and the active weights in the portfolio, the active weights in the portfolio will reflect the return expectation we have from that stock. I mean, obviously, basis the risk associated with it. So wherever we find the best risk-adjusted return expectation, we try to have the highest conviction in that stock.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.